Hi everyone. PepsiCo reported fiscal year 2022 fourth quarter results earlier, and I wanted to go through these figures just to take a look at if it's made its dividend payments safer or more sustainable, and that's what I'm going to keep a focus on while I'm reviewing Pepsi's earnings. So let's get right into it. So organic revenue increased by 14.6% in Pepsi's fourth quarter. Impressive double digit growth for a company that's really not known for revenue growth. Core earnings per share of $1.67 increased by 10% from the fourth quarter of 2021. The company increased pricing by roughly 16% across geographies and products, but with volume only falling by 2%. And management has been noting this over the past 2 years or so, with inflation increasing its own cost of goods sold. It's been implementing price increases, and it's surprised that consumers are still buying their products without pulling back too much, noticing these price increases, really demonstrating Pepsi's pricing power. Cash flow from operations of 10.8 billion for all of 2022 was down from 11.6 billion in 2021. And management made a comment here saying for 2023, we expect to deliver 6% organic revenue growth and 8% core constant currency earnings per share growth. We also announced a 10% increase in our annualized dividend starting with our June 2023 payment. That's good news. So dividend investors will see an increase in their dividend payment if they own PepsiCo stock, which represents our 51st consecutive annual increase. So more than 51 years in a row where Pepsi has increased its dividend. And they plan to repurchase approximately $1 billion worth of their stock. So overall, excellent quarter for PepsiCo, continued demonstration of top line growth, of earnings growth. PepsiCo is among the top of the list of companies that I follow in terms of their performance during and after the pandemic. So there was a lot of companies that did really well during the pandemic, and now coming out of the pandemic they're struggling, right? Amazon and Peloton are two prime examples of that, where they did really good during the pandemic, but now as economic reopening is gaining momentum, they're struggling, right? PepsiCo is one of the few companies, along with, I will say, Home Depot, that did an excellent job during the pandemic, and they're doing an excellent job coming out of the pandemic. So investors have to be really happy with the performance PepsiCo has delivered over the last 3 or so years. Really happy with their performance, and kudos to management here, because this has not been an easy task to deal with all the supply chain constraints, inflation, closing of economies, reopening of economies, to be able to manage all of that and deliver revenue and profit growth amid all of those challenges. Really hats off to PepsiCo management here, and excellent prospects for 2023, expecting revenue and earnings growth, and evidence of the safety and security and sustainability of the dividend right here, announcing a 10% increase in PepsiCo's dividend. So if you're a dividend stock investor, if you're looking for passive income, PepsiCo stock is an excellent option. 51 straight years of dividend increases. You can reasonably expect these dividend payments to continue increasing over the next 5 or so years. So excellent quarter from Pepsi. Really good news for dividend stock investors. All right, that's all I've got for this brief update. Thank you for tuning in. I truly appreciate it, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.